All right, welcome to today's session where MetaMask. I'm your host. I'm part of the team here in 2022, and with me today, Chris, who is the head of tax at Crypto Tax Calculator, or CTC for short. Chris, thanks for joining. Glad to have you, sir.
Yeah, thanks, Alex. I appreciate it. Just quick correction. It is Nick, not Chris, but no worries on that.
Why did I think it was Chris?
Thank you for having me. I don't know, but no worries.
Okay, good. I'm sorry, Nick. I think I had a small twist in here. Still very glad to have you.
Thank you. Even though I'm not Chris.
Yeah, we like you just as much, Nick. So I'll let you introduce yourself in a moment, which I think is very necessary. But before, let me tee up the agenda here for us for the next hour that we will spend together. So I will provide a few introductory, maybe ceremonial words up front, and then Nick will tell us about the importance of accurate tax reporting. We will then jump into the new Tax Hub. It's all about the new MetaMask CTC Tax Hub today. And then we'll have, of course, lots of time at the end for Q&A. Everybody's welcome to send their questions through. We'll do our best to pick them all up. And this is really when you can ask anything that you want to Nick here about tax topics. So before we jump into it, Nick, tell us a little bit about yourself, please.
Yeah, thank you. Appreciate it, Alex. Hi, guys. I'm Nick Waitula. I am a licensed attorney in the U.S. I got my start in crypto probably 2017, and then more professionally started doing crypto taxes for individuals around 2019 or so. So I've been in the space for a while. Got my start at a boutique law firm and then worked my way to Deloitte Tax. And in Deloitte, I was doing crypto taxes for the ultra high net worth private wealth individuals. And then from there, I went to TurboTax and I helped build TurboTax's crypto experience from the ground up. So, if you go into TurboTax in the US, there's actually a crypto experience where you can upload your MetaMask account and do your taxes. So I helped build that. And then more recently, last year, I joined Crypto Tax Calculator as the head of tax. And I've been in that role ever since. And I've been loving it and very excited to work with MetaMask.
Good stuff. And maybe just to add there, because I think it's an important feature, Crypto Tax Calculator is an Australian company, right? Based on the east coast of Australia. All your team
Sydney,
is there. So you're
we have most of our people in Australia, a lot in Sydney, but we also have team members in the Philippines. I'm in the US, so we're very much a global company with people all over the place. But yes, we were started in Australia by two brothers. Our CEO and our CTO are brothers. And much of our workforce is in Australia, but we are very global.
Good stuff. And we'll get to that in just a second, especially how it doesn't really matter in which geo you are. You can do your taxes now through this. But maybe to set the stage a little bit, it's a good segue. At MetaMask Taxes, we're on the agenda for quite a while already. Like, we wanted to have a really good solution for our users. It concerns 100% of people. At least it did until like 3 weeks ago. I don't know how many people are now still in the money, but that's for another discussion. We sat down with your team, with your leadership team, in November in Bangkok. We had a meeting together with your founders. And they walked us through the product and sort of how the tax situation is in 24 and 25, and it became very clear, that this is the kind of integration that would radically change things for the better. We started exploring that together, and basically have been, working it out for the last 4 to 5 months, very, very closely. Like, there's been, the effort of getting this live, what we're looking at today. something like 60 people worked on it on both the MetaMask and the CTC side. So it's been a massive effort. And you will show us this in a second, but the one thing that I find most notable, it's taxes 100% automated, right? You add all your wallets, all your protocols, everything you interact with, and it just reconciles the whole universe of transactions into one report and done. So I think that's super cool. As of March 6th, this is now live in MetaMask Portfolio. So we call it MetaMask Tax Hub, powered by CTC. For those who aren't familiar, so if you go into the MetaMask extension, there's a link that goes to Portfolio. It's sort of our browser-based exchange-like version of MetaMask that you can reach, through the extension and through mobile. And that's where the Tax Hub lives. So in the left-hand navigation, you're able to see that it's available to 100% of our users. Go check it out. Chris, sorry, Nick, I keep on going back. I don't know what's with that name.
But I just look like a Chris.
Yeah, just please excuse that. It's like I don't sleep much these days. I have 2 small kids, so like it might just be that it messes with my memory. I'll tell the few things that I want to sort of explain to our users here before I want to give it over to you, that I think is really important upfront to know is that the Tax Hub is personalized for every user. So when you log in, you have your own personal version. Anybody can create a free summary. It doesn't cost anything. It essentially means that you put in all your wallets, all your protocols. You'll show us this in a minute, and it will give you a summary of your earnings or your losses and your winnings, and you can see kind of like if there's taxable income. Mm-hmm. That works across most geos, and even if you trade across 15, 20 different places, it will complete all that chaos into one convenient sort of summary. So yeah, just every MetaMask user can benefit from that. And then when you want sort of like a full tax authority ready report with all the bells and whistles, then you can get that through a CDC subscription that is also accessible straight through MetaMask. And you were so kind to give our users a 30% discount of your regular prices, which I think is pretty significant. So, and that allows you to just download the entire report completely worked out. So I think this is the setup that we're looking at today. Just wanted to wish everybody a good session here, and making it over to Nick now to take it forward and tell us a little bit more about why that's important, especially right now in 2025, and show us most of all what the product looks like.
Yeah, appreciate it, Alex. So before we get to the demo, and we will get to the demo here in a minute, I just want to quickly talk about the crypto industry and the crypto tax industry kind of as a whole right now. So I'm based in the US, so a lot of my knowledge comes from the US. However, CTC operates in over 100 different jurisdictions. So, CTC has to comply with all of these different tax laws and all of these different countries and these different tax authorities. So in the US, we're seeing the 1099 DA come out next year with your 2025 transactions. What does that mean? That means the IRS, the tax authority, is going to have a whole heap of information on your transaction. So if you're on a centralized exchange, luckily MetaMask is not one of those, but if you're on Coinbase, Kraken, Gemini, any of these centralized exchanges in the US, they will send a tax form next year to you and to the IRS. So if you don't do your taxes, if you don't report your crypto next year, the IRS is going to know. Same thing around the world. All of these tax authorities around the world. For example, we were just talking about Australia. The ATO in Australia is getting very good with crypto. All of them are. So the days of, oh, I'm not going to report my crypto, the tax authority is never going to find out, that is gone. The tax authorities will find out. They use blockchain investigation tools. So for example, couple names here, Chainalysis and TRM Labs. Those are two blockchain investigation tools that these tax authorities can use to track your crypto. So they know everywhere it went. They know all of the wallets you've had. They know that wallet you had in 2018 that you don't use anymore. I trust me when I say that you don't want to be on the back foot here. Whatever country you're in, you want to report. You want to report your transactions. And if you don't, there will be consequences. The consequences might not come next year. For example, if you're in the US, you have about less than a month to file your taxes. If you don't file your crypto taxes, you're not going to get a letter in the mail in 2 weeks saying, hey, we need your crypto data. What's going to happen is you're going to get audited. And in a couple years from now, you're going to have to go back and explain everything you did. And if you're not keeping detailed records, it could be impossible for you to know what you did 3 years ago, right? If you have thousands and thousands of transactions every year, that's going to be difficult. So it's very important that you are compliant with your tax authority. And for whatever jurisdiction you're in, CTC can help. So I think that segues great into the demo of the MetaMask Tax Hub. So I will quickly share my screen here. And Alex, I can't see the screen, so if I can just get a verbal confirmation that everything looks good.
Yeah, you're good to go. It's pulled up. Take it away.
Perfect. Okay. So, as Alex mentioned, if you're in the mobile app for MetaMask, it might look a little different. But if you're on the computer, you'll go here in the MetaMask portfolio on the left-hand side. You go to Tax Hub. That'll bring up this screen. This screen is basically just a sign-in screen or a sign-up screen. So if you're new, you can sign up with an email or password. You can log in with your existing crypto tax calculator account. So if you've used CTC in the past, you log in and everything you've done, all of the data you've uploaded will already be there. But for the purposes of this, I'm just going to, I'm sorry, you could also log in with your MetaMask account. That's the big one too. It's just one click button. I'm just going to quickly stop sharing so I could log in without everyone getting my email address. Okay, cool. I am logged in and I'm actually going to pull up the settings tab and now I'm going to reshare. I'm just going to go through the settings real quickly first because there's a section in there when you open it, it shows the email address. So I've already hid that. So it's easiest just to do it now. It's important to know that you can choose basically any jurisdiction that you're in. If you're in the US, you'll select your country as US. What that will do, and you can see here there's some IRS rule changes, some information. It'll tailor the entire software to your country that you choose. So if you choose the US, the software will have US tax laws associated. If you choose Canada, it'll be Canadian tax laws, the UK tax laws. So whatever jurisdiction you're in, the software will sort of tailor the experience to you. So you can choose universal or by wallet, cost basis tracking. I'm not going to get into that too much. You can change many different inventory methods. If you're in a jurisdiction like the UK that has a specific inventory method, that'll appear here. You can change your time zone and then a bunch of different toggles to customize the experience. So, for example, if you're in a country where staking rewards are not income, you can actually turn that setting off so that all of your staking rewards will not be classified as income in the software. And you can see here we're kind of updating the calculations as we go. So many different settings that you can use. And as you can see here, some of them are on and off by default. You can change your long-term threshold if you're in the US, as well as many other things. So that is that. So now for more of the actual demo, right? So what I didn't show you guys, if you create a new account, it's going to take you through an onboarding flow. That onboarding flow is going to ask you your country of origin. It's going to ask you to upload an account and all of that good stuff. So I'm going to go over to the connected accounts. We'll come back to this summary. So in that onboarding flow, I uploaded a Coinbase account. And as you can see here, there are recommended accounts associated with that. So the software will look at the data, and it saw that I have transfers in and out of Coinbase to BTC markets. So it's saying, hey, add your BTC markets account. This is the most important step of doing your crypto taxes. If there's one thing to take away from this session, it's that the data is the most important thing. So you want to add all of your accounts from every single transaction you've ever done in crypto. So your first transaction in 2015 on Coinbase, we need that data. Your most recent transactions in December of 2024, we need that data, and everything in between. So when you're doing your, for example, your 2024 taxes, we need all of your data, not just 2024. If you only give us 2024, let's say you sold Bitcoin in 2024 or you sold Ethereum, we're not going to have the cost basis associated with that sale because you didn't give us the exchange history where you purchased it. So we have no idea how much you purchased it for. Therefore, your tax report won't be as accurate as it can be. If you give us all of your data, all of your transactions, we will create a daisy chain, what we like to call a daisy chain of your data, where there's no gaps. When that's the case, then your report will be as accurate as possible. So if you're missing any data, just know that it's possible that the software doesn't have the information it needs to calculate your accurate gain or loss. So I'll just show you how to add your account. So you click this add account button, and then you can see CTC integrates with over 3,000, I think 3,500 at this point, different exchanges, wallets, dexes, protocols, you name it. We support it. We also have a button to request an integration. So I'll just scroll down. If you don't see what you need, you can just come to this request integrations button, and we will prioritize and get that sorted for you. So I'm going to quickly pull up MetaMask, and I'm going to enter my MetaMask wallet address. You can make a name if you want, but I'm just going to import my address. The software is going to gather all of the transactions associated with this MetaMask address. Then you can click continue, and then you can see here it's going to sync in the background, and in just a minute it'll be done.
And Nick,
Okay.
are there any limits to like how many different accounts or wallets I can like load into this for like the average user?
Are no limits. You can, if you have one of those people that have 75 MetaMask wallets, upload all 75 of your MetaMask wallets. There is a transaction limit. I believe it's 100,000. So if you're over 100,000 transactions, reach out to our support team and we can help you. But by default, anything under 100,000 transactions, we can support. Does not matter the number of accounts that you add here. It's really a transaction volume limit, excuse me.
Good stuff.
Cool. So you can see here, if I wanted to continue adding all of my accounts, I would add my BTC markets account. I would add, my other exchanges, my other wallets, my other blockchains. But for right now, I'm just going to upload this data. Okay, taking a step back, if we go to the summary screen, you can see your estimated capital gain for the year. So you can change this if you want to look into your 2023 data, change it to 2023, and then there you go. So we'll go back to 2024 because that's the current tax year. So you can see, I have an estimated gain of about 28,000. And you see here there's a savings opportunity of 9,000. What does that mean? That means there is missing data in the account. Remember I said the data is the most important part? Well, this is because I didn't add my BTC markets and my other wallets and exchanges. So the software cannot calculate the basis for $9,000 worth of sales. Well, how do we do that? So a couple different ways. So you come here to this accuracy check, right? Two things you can do. You can add your missing accounts. So if you have missing transactions, could overstate your gains. So you'll want to add accounts. That'll just bring you back here. You choose whichever account you need. Let's say I'm on whatever this is, upload my Basilisk wallet, and then get that data. The other thing you can do is review your transactions. So sometimes if you're trading on a very obscure meme coin, maybe, there's no pricing data for it, so we don't have data. Or maybe if you're transferring in and out of wallets and you don't give us one of the wallet, we won't have, the second half of that transfer transaction. We might only have the deposit and not the withdrawal. So you can come to this review tab and you review all of your information. This review tab, it's very important to note that, you see here, the software automatically figured out 92% of my transactions. That's great. If I were to add all of my accounts, again, I said I have Kraken, Gemini, I have multiple different MetaMask wallets that I did not add. If I were to add all of my data, this number would be much closer to 100%, if not 100%. So if you give us all your data, there might not be anything to do in the software. So you can see here, this transaction is basically just an incoming of Ethereum. So we don't have the outgoing wallet. I didn't add that. So it just asked me to categorize. So I can just say, this is a purchase transaction. And then that transaction is good to go. Okay, I'm going to pause there a little bit and we're going to go back to the transactions tab. So just a quick overview of what we've done. The summary tab will show you all of your different holdings at the bottom, your token allocations, and your estimated, capital gains for the year. It's very important to note that this is free. Everything that I've just done, except this review tab. Ignore this review tab for now. Everything else is free. So if you just want to use this to track your portfolio across multiple exchanges, you can do that without ever having to pay. So you're already spending a ton of time in MetaMask. Oh, I want to know what my total crypto portfolio is looking like. You connect all of your accounts, then you come to the summary tab and it'll show you your balances for everything. And that's free. If you want to get your reports, that is what you'll have to pay for. So you can see here, there are many different reports. Again, I'm in the US, so these are US reports. So if I wanted to download IRS Form 8949 for my tax return, I can do that. And just quickly show you guys the plans here. So depending on how many transactions you have, if you have 100 transactions, you'll be at about $50 a year. This is USD for US users. And if you have 100,000 transactions, you're looking at more $500 a year. So depending on where you fall, most are in this hobbyist or investor category. That's how much you can expect to pay.
And Nick, we have this great voucher that we apply to subscription as well. So I think people are still going to see like a 30% reduction on those rates. Is that right? Or are those the discounted ones already?
That's correct. So all of these will be discounted 30%. I've already purchased the plan, so they don't, the discount doesn't show up.
Yeah.
But if, you're a MetaMask user, you would get about $150 off of this plan, the 30%. So your, top tier plan will be about $350. So it's a significant discount, and it's for MetaMask users only. So, if you're not a MetaMask user, if you don't have a MetaMask account, unfortunately, you won't be able to take advantage of that discount. So it's for MetaMask users only.
I remember how in 2017 or so, I got paranoid about my taxes in 13, 14, 15, and I paid like a specialized tax office a couple of $1,000 to reconcile everything for me like manually, and like sort of seeing how far this came now, that you literally just copy paste your addresses in, and for call it $200, it's just all done. Is pretty awesome.
Absolutely, and I'm the same way. So when I was working for these law firms and for Deloitte, we would have people come in that had extreme amounts of gains per year, and they would spend tens and tens and tens of thousands of dollars basically to pay me to come into one of these softwares and do this for them. But now, CTC has gotten so good that the average user, even if you're not tech savvy, if you can barely open your email account, we walk you through this entire flow so it's easy for everyone. So you add all of your accounts, You can review your transactions in the transactions tab. We automatically classify basically everything. DeFi NFTs, we specialize in that. So you can see here, this was a bridge transaction. We automatically classified that. Staking rewards, different types of activity. And then, if you have anything to review, you could review it there, categorize missing purchase history, and then get your report. So that's the general demo of the MetaMask Tax Hub powered by Crypto Tax Calculator.
Good stuff. Okay, thanks, Nick. I appreciate the demo. Yeah, just one more time, everybody, just head down to Portfolio, go and create an account, see what that looks like for you. Check out the free summary and see if you want to do your taxes in 24 with CTC. We'll get to our next agenda point. So we've walked through why crypto taxes is important, especially right now, more important than it used to be the last couple of years. Around the world, tax authorities get smarter and are able to track down all of these different wallets that you think are anonymous. We've checked out what the Tax Hub looks like. We want to now hop into a Q&A session and basically open it up for anybody here to ask questions, and we'll try to answer them as good as we can. I think the way to do it is that we, folks can put their questions here into the chat, and we'll see that roll by, and we'll pick up those that we like. So I think we have the first question here from Raj, which is, do you have training for somebody who wants to integrate the service on their existing tax service business?
Yeah, Raj, great question, man. We work with thousands of accountants all over the world. So many professionals and that have a tax business use our software for their customers. It's actually a very, very, very good thing to do for tax professionals. I do just want to throw in a quick disclaimer before I start answering questions. None of this is legitimate legal or tax advice. This is a conversation from someone who's been in the industry for a long time, who's seen a lot of things and has helped people with their crypto taxes. So everything you hear me say and you hear Alex say, this is just a conversation and it's not to be taken as tax advice. But that quick disclaimer out of the way, we work with accountants all over the place who are now able to upsell their services because they can do the individual's crypto because they have, CTC to use. So I'm an open book. You guys can find me on LinkedIn, social media, X, Twitter, Reddit, everything. So feel free to reach out to me, ask me your questions, and we can chat individually. But yes, we are happy to support tax professionals.
Cool. And then one question that I also had, by the way, just personally, is how can I optimize my crypto tax strategy if I've been trading in multiple countries? Any tips on tracking gains across different exchanges and wallets? So I'm not sure, like in my case, for example, it also means that if you switch geos, let's say, you live in this country for half a year and then you move to another one, like how does that work?
Yeah, every country is different. So it really depends on the individual country's laws. So for example, let's say you're in the United States, right? And you're trading crypto, but you're like, tax laws aren't friendly. Let's move to Puerto Rico, or let's move to the Cayman Islands or Dubai or Singapore or anywhere that has better taxes than the US, probably everywhere. So what you would do basically, and in the US, anything you purchased in the US, you'll pay US taxes on. So I'm just going to give a quick real life scenario. In the US, there's something called Act 60, where if you want to move to Puerto Rico, you can do that. And you can take advantage of Puerto Rico tax laws, which is very, very, very crypto friendly, very just friendly in general. If you purchased the asset in the US before you actually moved, then you owe US taxes on that when it's sold. So let's say I purchased something in the US in 2017. In 2018, I moved to Puerto Rico. And then in 2024, I sell that asset. because it was purchased in the United States, I will have to pay US taxes on that asset. So when you're thinking about multi-jurisdictional, taxpayers, wherever you purchase the asset is likely where you'll have to pay tax on it. So you can purchase something this year, move next year, sell it in 2032, and you'll have to pay taxes on it for that jurisdiction it was purchased in. Again, every country's different, but for many of the major ones, that's usually how it works.
That's super good input. So, and do you think across Europe that's the same as well, as far as you know?
Yeah.
Yeah.
Europe is a little bit different. It's a lot easier to move around countries than it is in, for example, Australia or India or the US or any of these, larger countries. But yeah, for the most part, that's how it works. But it is just very crucial that before you do anything like that, you talk to a tax professional in your jurisdiction, and they'll be able to help you. They'll know the specific country's laws and what you can and can't do.
Good. There's one more question, which I think is current as well, which is how are meme token airdrops and potential rewards from these meme tokens taxed? A person would like clarity on whether these count as income or capital gain.
Great question. Honestly, one of the better questions anyone's asked me in one of these sessions. So meme coins, hot topic right now, right? Every country does something different. So what I'm going to say applies more generally, but if you're in one of those countries that does something very specific, talk to a tax professional in your country. So meme coins traded like crypto, right? There's arguments to be made in the United States right now that meme coins are actually collectibles. If they are considered collectibles, they're taxed at a flat 28%, regardless of your holding period, your income bracket, or anything. That's kind of the minority view right now. The majority view, at least in the US and more broadly in the majority of countries, is that these meme coins, airdrops, staking rewards, things like that are taxed as income.
Mm-hmm.
So your ordinary income, just like your job. So if I received Ethereum staking rewards, you take the fair market value. So what it was worth if I received one Ethereum when Ethereum was worth $2,500, that's $2,500 of income. So at least in the US and typically more broadly, the phrase to look out for is dominion and control.
Mm-hmm.
So if you have dominion and control over an asset, that's when you recognize it as income for airdrops, staking rewards, things like that. So let's say you get an airdrop of a meme coin tomorrow, and tomorrow that meme coin is worth $1 a token, and let's say you get 1,000 tokens. You will recognize income, ordinary income, of $1,000 from that meme coin. But it's not over yet. So you recognize that. If you then go to sell that asset, you will incur a capital gain transaction. So if you receive an airdrop, there's a potential for two different tax implications. The immediate tax implication is income at the fair market value of whatever that asset is. And then if you end up selling that asset down the line, you will have a capital gain or loss associated with that transaction that needs to be reported. Some countries are different. Some do not recognize airdrops as income. So if you're in one of those countries, I believe Canada is one of those countries, you don't have to report your income. There are other countries, I believe Austria, where they have different reporting standards. So if you're in Austria, some of these other countries, just talk to a tax professional. CTC actually has an abundance of resources on our website. Go to our website, and you could probably find a resource for whatever country you're in. So we have, UK tax guides, Australian tax guides, German tax guides, literally pretty much everything you can think of, we have it. And we're always releasing new content every day. So just go to our website, and we probably have, a blog or an article that helps you for your jurisdiction. Start there. If that doesn't necessarily get you to the answer you'll need, then talk to a tax professional.
Okay, good stuff. There's one more around staking. So you have your ETH staked, for example. You have 10 Ethereum that's been staked over the year. Now the price of Ethereum fluctuates and kind of goes all over the place. You don't have like a timestamp transaction, but like you earn a little bit kind of like throughout at different rates. How is that usually taxed? And again, you might be having to give a general answer because that's probably different, but like in the jurisdictions, like how do they keep track of these fluctuations as opposed to normal transactions?
Yeah, great. So a software like CTC or the MetaMask Tax Hub will do that for you. So there are many pricing services out there: CoinMarketCap, CoinGecko, Yahoo Finance, I believe, does crypto pricing. So let's say you received, and you said airdrop, or was it staking?
Staking. So yeah,
Staking, right?
I stake my ETH for a year. Like
Okay.
how does that work?
Yeah, so it depends on how you receive the tokens, right? The staking rewards. So if you're receiving them in small increments, let's say you have a Coinbase account and you just hold Ethereum and they send you a little bit of, Ethereum staking rewards every day or whatever.
Yeah.
Every single day, you'll have to calculate the fair market value of that staking reward and report that on your taxes. So again, tomorrow I receive an Ethereum staking reward of 1 Ethereum. Congratulations, great staking reward. You get 1 Ethereum. Let's say Ethereum's at $2,500. I will recognize $2,500 of income on my tax return. So it's the same for staking, airdrops, things like that nature. Whenever you receive it, again, dominion and control is the common phrase. Dominion and control means I can transfer it, I can sell it, I can do something with it. I have it in my possession.
Yeah.
If you have staking rewards that are locked up that you haven't accessed, that's maybe a different argument. Maybe you don't have dominion and control over those and don't need to recognize them as income yet. So there's a lot of different nuances with staking rewards. But generally, when you have dominion and control, when you have the ability to do something with them, that's when you recognize the income.
Okay, good. I'm seeing here a few more comments. Airdrops also depend on if you were paid for goods and services, correct? There's one last question from a user that's wondering if we will cover tax efficient Bitcoin trading strategies. So that's a bit more like a general topic, but maybe a couple of thoughts around this.
Yeah, tax efficient strategies are important. So I think a lot of people in the crypto industry trade, never think about taxes. Oh, I don't have to report taxes. CTC has done dozens of studies. The most recent one we did, it's a qualified survey. So in the US, I forgot how many people we surveyed, but I believe 65 or so percent of them did not know that anything on chain is taxable. So they thought only your centralized exchanges are taxable. So there's a lot of misconception in the market about what you actually have to report. So thinking about taxes is always very, very important.
Yeah.
There are many things you can do to sort of minimize your taxes, and it depends on what jurisdiction you're in, of course. So a couple of the common ones, the most common one is tax loss harvesting. So let's say you bought Bitcoin for $100,000 and a month from now, it drops to 80,000. If you sell that Bitcoin at $80,000, you will recognize a $20,000 loss on that trade. Those losses can be used to offset any other gains, or even reset your cost basis. So let's say I only have that 1 Bitcoin in my account. I've never bought any other asset. I buy for $100,000, I sell for $80,000, and then I rebuy for $80,000. I just took a $20,000 loss that I could use for my taxes. If you're in the US, you could use 3,000 of that for other types of income. Other jurisdictions, maybe not. But you just reset your basis to $80,000, so a little bit lower, so that when that price of Bitcoin increases, you can take a gain on that. Now let's add a little bit of complexity to it. let's say you have Bitcoin and Ethereum. Let's say on one Ethereum trade, you made $30,000. On one Bitcoin trade, you lost $20,000. So you can actually net those out. And this is what tax loss harvesting is. It's harvesting your losses to offset your gains. So $30,000 gain, $20,000 loss, put those together, and you only get a $10,000 gain. So you don't have to pay taxes on that $30,000 from Ethereum, just the $10,000 from your total gain or loss. So that's a really common strategy to use. Another one is your holding period. So if you're in the US and you hold for greater than 1 year, you can take advantage of long-term gain rates. They typically go from, I believe, 0 to 15%. If you were to hold for less than a year, that's short-term gains. Short-term gains are taxed at, I believe, from 10 to 37%. So you see there, let's say you're in the 37% tax bracket. If you sell 350 days after buying the asset, you'll have to pay 37% tax on that trade. If you wait another couple weeks and do it after the 1 year, then you might only have to pay 15% tax on that trade. So the timing is very important as well. So I would say those are the two biggest strategies for kind of minimizing your tax liability. Tax loss harvesting. If you have NFTs that aren't worth anything, let's say you bought an NFT last year for $1,000 and now it's not worth anything. You can sell that NFT for basically nothing and recognize $1,000 loss to offset some of your gains, right? So if you have these worthless assets, meme coins that you spend a lot of money on and you're just riding out because, oh, maybe it'll go up in value. If you sell it, you could actually offset some of your gains that you've made. So that's tax loss harvesting. And then the second one is the holding period, holding for longer than a year if you're in the US or a jurisdiction that recognizes that.
Yeah. Yeah, we have that in a couple of countries, in Germany and Portugal. If you hold for more than a year, then it's completely tax-free, right? The crypto assets, which is fantastic if you just buy and hold. Makes things very easy.
Tax-free. You can't beat tax-free.
That's the dream. Good stuff. So those were the questions that I have here on my screen. We'll give everybody a chance to ask anything else in the chat if you feel like it, and give folks maybe another 10 seconds or so if any pressing questions are coming in. And while we let them come, I want to already sort of move to the final section, which is a few of the closing remarks here. So first of all, Nick, and not Chris, I really appreciate you coming on here today. And walking us through the Tax Hub integration in MetaMask, but also giving us a little bit of color on sort of like where crypto tax stands overall. Like what I really took away from today was like, don't sort of dread the topic of tax and just put it off and sort of say like, I'll take care of it sometime in the future, or they never found out. That like that's a surefire recipe to like, you know, create a massive problem in the future. It's not necessary. Like, you know, it takes 30 seconds to punch in the wallet addresses and basically let the software take care of it. So I think that's my biggest learning. Like, just, you know, use it. It's at your fingertips now since a couple of weeks. And then, yeah, just also really appreciate all that great work that went into sort of that collaboration. So, you know, we were doing a lot of due diligence about different providers, and we felt we really found a great match with you. And, you know, just through the months over the winter, grinding it out and making sure that everything works, like it took a lot of work from both sides, but especially from all of your team, and just fantastic that you made that possible. I think everybody is very happy with the final outcome of the Tax Hub and how it looks. I know I am.
Great. Thank you so much. Just quickly on that, I don't mean to interrupt you. I just want to give a shout out to our dev team. Our devs at Crypto Tax Calculator are some of the smartest engineers I've ever met in my entire life. And they were able to build this experience very quickly while staying on top of all of the other work they have to do. So just a quick shout out to our dev team.
Good. Yeah, really fantastic work. And yeah, we're looking forward. It's no secret that tax season basically has started, right? In the US, there's less than a month until sort of the deadline. In Europe, April is traditionally the time also when we're getting ready. So just make sure that this year you're safe. You're taking advantage of the great sort of discounts that we're giving you. You might already be okay with just a free summary in some jurisdictions, but just it's an easy lift, whichever way you want to go. We hope that Tax Hub is going to be very useful for you. And yeah, again, everybody, thanks for tuning in today. We appreciate you. Have a fantastic rest of your week. I'm just looking into the chat history, but we do not see any new questions. So we'll give folks 14 minutes back here until for this session. And please do stay in touch. You've heard it from Nick that he's available through most social channels. Look him up if you have any questions. And from us here, all the best. Have a fantastic rest of your week.
Thanks, everyone. Thanks, Alex. Thanks